So we are waiting for 1 or 2 minutes. So that people can join. So I can still see people coming in. So we are waiting for a minute and then we start. Okay, so let's start the webinar. Good afternoon, dear ladies and gentlemen, dear participants, dear colleagues. I warmly welcome you to this webinar about green finance going global, solution or trap. This is the title of this webinar. And it is jointly organized by the Mattersburger Kreis, the Paulo Freire Center, the Chamber of Labor Vienna, the Momentum Institute and the VIDC, which is the Vienna Institute for International Dialogue and Cooperation. And my name is Martina Neuwirth. I will moderate this webinar, and I'm working on international finance and economy issues at the VIDC. So let me first thank my colleagues Maida Schuller and Clemens Pfeffer of the Mattersburger Kreis for the technical support. They are in the background, you cannot see them, but thanks to them. I also want to thank the Austrian Development Agency and the Chamber of Labor Vienna for the financial support, not only of this webinar, but also of the special issue on green finance of the Journal für Entwicklungspolitik, the JEP. I will come back to that issue a bit later. So for the beginning, just a few technical remarks. This is a webinar, and therefore only our distinguished panelists can be seen and heard. And but I warmly invite you to pose questions and comments in the Q&A section. Please only use the Q&A section for posing your questions. In German, it's the F&A section. You should be able to find the Q&A button at the bottom of your screen. So please do not use the chat function, because then you will make my life as a moderator really much easier. Thank you for that. However, please look into the chat from time to time, because we will also send you useful links and other information over the chat. The webinar will also be shown on Facebook and YouTube. So I also warmly welcome all of you who are watching us on Facebook and YouTube. And I also hope that you will enjoy the seminar and the webinar. The webinar will end at 5:30. Before you leave the webinar, I finally ask you to fill out a very short survey so that you can tell us what you liked about the webinar, what you did not like so much, what we could do better next time. And thanks in advance for filling out this very short survey. It will not take you more than 4 or 5 minutes. So please watch out for the link a bit later. So today we will discuss the role of green finance, so to say, the new poster child, as you can say, of banks, international financial institutions, politicians, etc. The term for me seems to be a bit ambiguous and also quite broad. And I have looked into the web and looked out for definitions. And some definitions I have found came, for example, from the G20 Green Finance Study Group. And it says green financing is financing for investments that provide environmental benefits in the broader context of environmental sustainable development. So it puts or it makes a link between green finance and sustainable development. The OECD, on the other hand, says green finance is finance for achieving economic growth while reducing pollution and greenhouse gas emissions. So the OECD makes a strong link to growth or green growth. We will talk about the link to growth, I guess, maybe later on today too. And finally, People's Bank of China says, green finance policies shall attract private capital investments into green industries. So the People's Bank of China puts a lot of emphasis on attracting private capital investment that should go hand in hand with, that should be linked to green industries. So I think we can all agree that environmentally and socially sustainable transformation of our economy costs money, but there is money. There is a lot of money available. It's just a question if it is directed in the right way. And this is not only a matter of quantity, but I think also of the quality of green finance. And this quality of green finance will have a great impact also on the quality of social and ecological transformation. So will green finance deepen already existing inequalities? Or will it just lead to further overuse of resources? So if you put it in another way, will green finance just deepen already existing problems, or will green finance really contribute to an environmentally and socially just transformation? Or are there any alternative approaches? Is finance really all that it is about when we talk about transformation? I really wonder what you think about green finance, and this is the reason why we have prepared a very small poll, and I asked Clemens to start this poll. Can you start it? Because now it's your turn, dear participants, to tell us what you think. Does green finance contribute to a social ecological transformation? Yes. Or do you think that green finance has the potential to bring about a social ecological transformation? Rather yes, maybe. Or are you rather skeptical? Or do you think rather not? Or do you disagree completely? No, green finance does not have a role. Or green finance prevents even a real social ecological transformation. So please, please choose your choice.
Short technical point, Martina, could you put your microphone a bit far away from your mouth?
Yes, of course.
Yes. Okay.
Thank you. Is it better now?
Mm-hmm.
Thank you. So I give you now 1 minute or 2 minutes, and in the meantime, I will shortly come to my dear panelists. So my distinguished panelists, Lama Tavakol, Julia Yurchenko, Johannes Jäger, and Samuel Decker have all published articles in the recently published special issue of the journal für Entwicklungspolitik, the so-called YEP, and I show it also on the screen. So it looks like this, a very nice journal. And they have tried to find answers to these questions. Yes, you can see it now also on the screen. And Anna Henberger and Oscar Reyes, who are also present with us, who are with us today, will then comment their findings. So the YEP special issue focuses on the impact of green finance on the global south and also on Europe. And in the chat later on, you will also find a link where you can download it, or where you can find a bit more information about this special issue. And now maybe it is also time before I present my panelists to then maybe we can okay. So only a few of you have said that green finance contributes really to a socio-ecological transformation. Only 2 of you. So this presents a bit of skepticism, but it has a potential. So most of you say it can have a potential. But also a lot of you say, well, I'm a bit skeptical, and maybe rather yes. So I see a slight majority that says, yes, it could have a positive role. But if I interpret you right, then I would say that most of you are not really sure if it has. So maybe our webinar can give you answers to some of your questions that you might have when you have filled out this very short poll. Thank you for answering. Now I would like to present our panelists to you. I start with Johannes Jäger. Johannes is one of the co-editors of the YEP. He is a professor and economics coordinator at the University of Applied Sciences, the BFI Vienna. His research focuses on critical international political economy, finance, regional development, European integration, and Latin America. So very welcome to you, a warm welcome to you, Johannes. Lama Tavakol is a doctoral candidate in the Department of Political Studies at Queen's University in Canada. Her PhD focuses on the intersection or intersections between global capitalism, foreign aid, and assistance to the global south, as well as the governance of public services. Welcome. Samuel Decker works on as a research associate in the network of pluralist economics in Germany, sorry. And he's also co-editor of the book Advancing Pluralism in Economics, International Perspectives on a Textbook Science, that was published with Routledge in 2018. Hello, Samuel. Yulia Yurchenko is a senior lecturer at the Political Economy, Governance, Finance and Accountability Institute at the University of Greenwich. I hope I have pronounced it right. And a vice chair of the Critical Political Economy Research Network, ESA. Her research interests lie on the relations between state, society and capital, and she has a geographical focus on Europe, post-Soviet countries, post-Soviet space, as well as the Ukraine. Hello, Julia. Now, finally, our 2 commentators. Anna Henberger is a political economist at the Momentum Institute in Vienna. She studied at the heterodox Kingston University in London, and her master thesis deals with the dynamics of regional development. Hello, Anna. Last but not least, Oscar Reyes is an associate fellow of the Institute for Policy Studies in Washington, D.C. And he's a writer and researcher and focuses on climate and energy finance. So this is really our issue today. Hello. Hello, Oscar. Thanks for coming. So I will now start with ask you for a first comments that somehow refer also to the articles that you have presented in the YEP. And also, of course, because it's related to the YEP, I start with the co-editor of the YEP, of this YEP issue, with Johannes. So taking up the title of this webinar, do you think that green finance is really a solution, or is it rather a trap in your mind? Do you see problems with green finance? And if there are problems, how do you think that the problems can be solved? And can this special issue of the YEP, can it contribute to the debate about how to solve these problems? Johannes, the screen is yours.
So thank you very much, Martina, also for the introduction and also for the survey, which showed very clearly that there is optimism and skepticism regarding the potential of green finance. And I hope that this webinar really contributes to clarify a bit what green finance is about and also to contextualize green finance. And when we try to put together this special issue, we basically try to start with the first question: what is at stake? And the point is that if we talk about environmental issues, it is clear that this is kind of a global perspective that's necessary to deal with environmental issues. So the question, if we ask about the contribution of finance or green finance to environmental problems, needs a global perspective. That's one point. Second point, it's absolutely important to analyze green finance not in an isolated way, but in the broader context of the financial system as such. So including what's often called brown finance. And I think also very important, that's what we try to do in this special issue, to talk about the global relationships, the asymmetric relation also between the global core and the global periphery, or the global south and the global core, and the role of finance therein and the potential of green finance in that. And we have different contributions in this special issue, which focus on specific cases. And I think they really help us to understand how green finance has to be analyzed in this international dimension, and also how and why it's necessary to focus on different actors and different levels also if we do that. And there's also a third thing that we did, and I'd like to share my screen, because what we try to do is to come up with a classification of different forms of green finance. So if you look at this, we try to distinguish between three types of green finance. And this is kind of an outcoming of this special issue. And the let's say the way how we try to define the different forms of finance was by looking at the effects of different forms of green finance. So we distinguish between neoliberal green finance, reformist green finance, and progressive green finance. Basically, neoliberal green finance is what is the bunch of what we see out there, what's going on under the heading of green finance. Basically, if we take a closer look, and we did this in this journal, we can characterize this approach as one that has no significant environmental effects. And in addition to this, it also has adverse income effect. That means it tends to favor rich people at the expense of poorer people, in particular, also at the expense of poorer people in the global south. And a central element of this neoliberal approach to green finance is voluntary standards, and also the state supporting private finance, subsidizing finance, or supporting private finance by tax cuts or similar measures. Reformist green finance is, compared to neoliberal green finance, more desirable. It, in the end, builds very much on strict environmental rules, which provide the framework for finance. And finance, mainly in this reformist perspective, does not rely on private finance, but on public finance. As such, green finance very much has the potential to contribute to a greener capitalism. The problem, and that's what we point out in this journal, is that green finance still in this reformist shape or tends not to stop the global overuse of resources, and also the uneven overuse of resources, what means that in the global north, people use much more environmental resources, contribute much more to climate warming than people in the global south. Reformist green finance does not really address this problem. Reformist finance, also to give you an idea, is something that comes very close to, at least in certain aspects, to proposals made by UNCTAD. So the Green New Deal by UNCTAD is, in our reading, something that can be categorized as reformist green finance. And finally, there is another form of green finance, namely progressive green finance, that is supposed to contribute to global sustainable wealth. What means wealth that and a form of living that allows everyone in the world to have a decent living, access to environmental resources, to food and other environmental resources that are needed. And this is very much based on global environmental rules, based on the principle of solidarity and on financial cooperation. But financial cooperation here means an extremely strong role of the public sector. So this is just to give you a first overview, a classification, and I think or hope that this is helpful if we talk about green finance. So if you go out here and see, is this rather neoliberal, reformist, or progressive? And this helps us to also be more, have a clear idea about the specific measures that are part of this green finance discourse. So I will end with this and give back the word to Martina.
Thank you very much for this very short overview. What I hear out of your first presentation is that there's a lot of inequality, also environmental inequality, that current forms of finance do not address. And what I also hear from your comments is that there is a lack, I would say, of global financial cooperation, because if you say that progressive finance needs that, then I would suggest that we don't have it at the moment, or not at the level that we would need for tackling the problems. Is that right?
So thank you for giving me the opportunity to clarify this. I think it's really important to know that the current financial system, or the global financial system, has a very, very negative impact on the global south. So UNCTAD and Accuse, for example, they calculate that on an annual basis, about 440 billion of US dollars are transferred as a net transfer from the global south to the global north. And the point is, if we talk about green finance, we have to talk about these structures and make the whole financial system fairer. UNCTAD, for example, proposes very much to restrict these private financial flows because they contribute to outflow of resources. And the point is, the large share of what is today discussed under the heading of green finance basically follows a similar logic and also contributes to, in the end, extract more financial resources from the global south, but also more natural resources at the expense of the global south. So I think the financial system that exists currently is highly problematic, not just to the global south, but it also contributes to the overuse of global resources, and we need a radically different way of organizing that.
Thanks for clarifying, because I think that's important also for our next speaker, Lama Tawakol, because Lama, you wrote about the humanitarian development nexus and also plunged a bit into the so-called Jordan Compact. Considering this case of Jordan, do you think that global green finance deepens inequality? Also, when you look at the experiences made with the global with this compact, and if this is the case, how did it or how does it deepen inequalities?
Hi, thank you. So I think that the case of Jordan presents us with, or the Jordan Compact, which was the European sort of deal to provide money and assistance to Jordan in addressing its challenges, particularly in the wake of the Syrian refugee crisis and so forth. And a big part of the emphasis of the Jordan Compact, or the broader humanitarian development nexus, is to help Jordan and other host countries with their environmental problems as well. So for instance, Jordan has a big water scarcity problem. The issue with the policies and the strategies that come with this green finance is that they're not new. So under the guise of sustainable development, green finance, fighting climate change, and all of these emerging development tropes, the same policies that have been advanced by development actors, the same neoliberal policies, I should say, are advanced, but under new sort of terminology. So in so doing, what we argue in the paper is that these policies are inherently unequal. They are based on unequal power relations. They are based on class interests, and they serve, as neoliberal green finance more broadly or more abstractly does, to prioritize private interests of specific classes over the interests of those that they intend or supposedly serve: refugees, local populations in Jordan and the global south, etc. So this happens in a variety of ways. For instance, first off, these green finance deals or these loans promote further debt. So even though they say that they're going to address Jordan's increasing debt, they actually contribute to that debt. And some of their solutions is that Jordan needs to even take out more debt. So that is one very clear thing. The other thing is that by framing Jordan's environmental issues in purely economic terms, the solutions that are presented are equally economic. So they promote tariff increases, they promote more austerity, they promote further privatization in various ways, all of which serve private interests at the expense of local populations. So while contracts are awarded to different companies to carry out these projects in millions of dollars, on the other hand, Syrians and Jordanians' unemployment is increasing, their poverty is increasing, the bills that they need to pay, their financial situation are getting worse, because in more general terms, the private interests are taking center stage over the public good, in this case, under the guise of economic growth. So to wrap up, in a nutshell, I think that this is just, so green finance or these deals, loans to address environmental issues are just fail forward neoliberalism. So they're the same. They attempt to address the problems of neoliberalism by advancing even more neoliberal policies in a very unequal and deeply political thing. Other interests that are also served that even further this inequality are geopolitical interests of donors. So for instance, we show this in more detail, but some of the impacts of these loans is to contain the Syrian refugee crisis within neighboring host countries rather than to have refugees move on to Europe, for instance. In exchange for a lot of this money, Jordan also assists the geopolitics of donors in, say, the fight against ISIS or in other examples. So at the end of the day, the money is advancing the interests of very specific groups, namely private interests predominantly from the global north, rather than the intended beneficiaries. So I hope this answers the question.
Thank you very much. I mean, the compact was, as I read it, or as I understood it from your article, was basically also an instrument for the EU to keep refugees at bay, to create jobs in Jordan and so that Syrian refugees can find a living in Jordan. It did not have especially environmental focus. So it was more an instrument for job creation, environmental development, and support of refugees, isn't it? So my question would be, do you think that this is problematic because it doesn't have an environmental focus, but obviously it has environmental effects, no? Do you think that green finance might also be only used in I would say in environmental or ecological silos, that it's not so to say it's not environmental considerations are not taken into account also in other policy areas like dealing with refugees, with job creation, etc. What are your experiences?
So I definitely agree. I don't think that green finance sort of reflects in all other sort of development aims or development goals. But one point of clarification is that the Jordan Compact does include, so it does touch on, it's a very vague document, but it does touch on the environment. So it sets itself up as the way forward for Europe to help Jordan with the impact of the refugee crisis and to turn the refugee crisis, as they term it, into a development opportunity. So we're going to use the funds that we give as the EU, that we give Jordan, to promote the development not only of Syrians, but of the local population and of Jordan as a whole. Now, the emphasis so far has been on job creation and employment, but there is at least a discursive emphasis on the environment as well. So the move towards cleaner energy sources, for instance, renewable energy, and of course addressing the water issue. So even though not all the projects come out and say green finance explicitly, there are the undertones of there are environmental issues that we need to address. But like I said, they're only addressed from an economic standpoint. So even water projects that are enacted are emphasized to lower the water sector's debt or increase tariffs or provide job opportunities to Syrians, not really addressing the fundamental environmental issue.
And water is really a crucial issue in the region, no? So
Yeah,
it does make an impact how you treat that. Okay, thank you very much for explaining that to us. Samuel, we have, Lama has talked about the role of the EU, and we are now turning to Green Deals or Green New Deals, and you have also addressed the European Green Deal and have looked into those concepts. So how did you evaluate these concepts, and what is the role of green finance for these Green Deals?
Yeah, thank you for your question and for the invitation in general. Indeed, I focused in my contribution more on the political economy of social ecological transformation in general, rather than on the political economy of green finance, but there are linkages, of course. In particular, I analyzed the transformative potential of various Green New Deal concepts. And to be able to do so, I developed this integrated scheme of transformation in my article. There's a lot of abstract Marxian theory behind it, but I will spare you with it for the moment. As you can see, there are 3 different areas of transformation that do in turn correspond to a certain type of transformation. So we have the area, I don't know if you are able to see my cursor, the relationship between labor and capital income that corresponds to the area of redistribution as an area of social ecological transformation. We have the relationship between companies, between different capitals that corresponds to socialization in the realm of economic policy. And we have the relationship between the production system as a whole and the state system that corresponds to economic planning. And with this integrated scheme of transformation, I took a closer look at the debate about the Green New Deal. I also touched upon the Green Deal in the European Green Deal, but I focused on the Green New Deal concepts mainly, namely those 3, the eco-socialist Green New Deal by the Democratic Socialists of America, the Green New Deal for Europe by the DiEM25 movement, and the Green New Deal concept put forward by the UNCTAD, which Johannes was already mentioning before. And in general, I found that all the Green New Deal approaches focus on redistribution measures, which theoretically can develop transformative potential, but only if these measures are far-reaching enough and are combined with further levels of transformations, which I have outlined before. So some Green New Deal approaches do indeed include policies for socialization. Macroeconomic planning, however, plays hardly any role. So you could sum up that the Green New Deal combines more or less classical social democratic redistribution policy with some new and more radical ideas, however, with a focus on the former. And there could be, I think, a potential link to the classification of green finance, which Johannes has put forward, which I outlined, but I think that's something that would have to be explored more in the future.
Okay, thank you very much. May I ask you what you because these three concepts like redistribution, socialization, and planning seem to be quite central to your framework, isn't it? What do you think about socialization? Does it mean what can you explore that a bit more?
Well, it depends to like a bundle of economic policies. Like the theoretical concept behind this is that certain unit of production, which would be a company, then is taken out of the accumulation nexus, and its internal processes are reorganized towards the production of use values rather than the production of profit, the production of profit for the company. And so examples would be worker-run cooperatives, commons, and so on. But however, with all those three different areas of transformation, every area has its own certain contradictory tendencies. So if you do a lot of redistribution, for example, in the economy, or a lot of socialization, you produce conflicts with a capitalist system, and those conflicts have to be resolved via linkage to the other levels of transformation.
So it somehow points to the problem that we have, that how to deal with environmental problems in a capitalist society, economy that is driven by fossil fuels also and by growth. No, so it somehow addresses this problem that we have. How to deal with those problems in this economic system that we are facing now at the moment. Maybe we can come back to that too. So finally, I would like to address Julia. Samuel has mentioned very shortly, he has not given us any details, maybe we can come back to that later, of the European Green Deal. So let's stay in Europe for a while, for a short while, because you have analyzed the role of energy systems and the EU energy packages. And what I found interesting, you used Elinor Ostrom's model of socio-ecological systems to analyze the energy sector that is really crucial also for an economic transformation. So which problems have you detected in this crucial sector? And is green finance going to deepen these problems? Are there alternatives? What could you find out?
Thank you very much. It's always good to go after a couple of people already spoken and laid out some of the foundations of this really important special issue. It was a pleasure to work on it. I think looking at energy systems, and specifically the European energy market, precisely because of how deeply integrated it is, as a socio-ecological system, really allows us to understand and to encapsulate the nuances of various levels of small and large producers and consumers in this very complex system of demand and supply, especially in the process of transition to flow energy, where we have a combination of large-scale producers with micro producers. And decarbonization indeed is something that is one of the key aspects of green politics, and therefore is one of the main targets, if you like, of green finance. And looking at energy markets is actually quite interesting, because the energy sector is a testimony to the need of a systemic policy approach that binds together other sectors. It is a producer of energy and also is a producer of emissions, but it's also an irremovable object of any economic system, as human societies are heavily dependent on energy for everyday uses, from cooking to heating to lighting our homes and hospitals, to public transport and industrial needs. It's also an important employer, and that means that any restructuring will need to balance interests of various social groups and agents or so-called stakeholders, as they're referred to in EU and other forms of documentation and overall mainstream lingo. And that makes energy transition a contentious matter for energy workers' unions, as often decarbonization can also lead to job losses. And thus financing of green initiatives absolutely should be part of the large-scale programs that go beyond funding wind farms and solar panels, but also actually think about what gets financed, how it gets financed, whose money is being used, who will own the final product of that investment, and who will benefit from that financing. Those questions are absolutely crucial, and that's why I think this special issue is so important, because again, the cost and benefits are in the crucial process of decarbonization and overall greening of our economies end up being distributed very unevenly and very often indeed exacerbating pre-existing geographical and social unevenness. And we saw that with the energy market to an extent as well. And this is why energy market of the EU is quite interesting to look at, because as I show in my piece, when and why market, I tried to show it how, when and why market-based approaches to green transition can go wrong. So EU has been trying this liberalized approach to its energy market for over 20 years. In the early 90s, they started. So we can now really take stock and see what works and what doesn't work. Yeah, and many different approaches were tried in the EU, and they actually built a lot on British experience, which by the point of rolling out EU reforms, already have shown that it's really not working very well. Still, it was rolled out, the whole unbundling and liberalization, marketization of the systems. And the goals of that approach were to secure supply of energy, to reduce costs, improve efficiency, marketize generation and supply of energy, and demonopolize the markets. Well, we have seen by now that actually those goals have not quite been achieved. It's been really hit and miss, and again, and led to a lot of unevenness across the EU member states. And moreover, many of the so-called achievements of this liberalization came as the result of exporting dirty production to countries where regulations were more relaxed. For example, China, who are the world's leader of emitters by production of greenhouse gas emissions, of course, but by consumption of emissions, EU and the United States are still leading the way. So this also tells us something. And that is something that's more sort of going to the core of this green finance, because it still is an approach that sits against the trajectories of growth and markets and trade and globalization, which have been proven over and over again to be leading also with them environmental damage, not only from fossil fuels, but consumption, production nexus altogether. And so these growth dogmas that are hardwired into the EU architecture and into the Green Deal as well, they are something that's going to be a stumbling block and a potential pitfall for these new reforms that are being rolled out through the European Green Deal, which has climate neutral Europe and circular economy and building and renovation and zero pollution and ecosystems and biodiversity and farms to fork strategy and transport and finance and research and development and innovation as their objectives. But this, what I've shown in my piece is this kind of market-based approach is something that actually stands in the way and can really undermine this transition that should be based on the principles of energy democracy and just transition, which means publicly financed transition with democratic control and inclusion of stakeholders of various ranks. Because at the end of the day, citizens and consumers should not pay twice for the operational costs and construction costs of new renewable energy capacity, for example, and also to subsidize profit of private companies who will then reap the benefits of these subsidies once they are projects once they are completed. Energy should be treated as public good and as a common pool resource, because without which contemporary society cannot exist. And once we start having that approach, we get to understand that the financing should be working differently, decision making should be treated differently, and everybody who has a stake, and this is all of us in this room and outside this room, we should all be allowed to have a say in how things are managed and have a stake in it. Thank you.
Thank you so much. I think you have, for me, you have addressed 2 or 3 also important things apart from the EU Green Deal. And one is that you have addressed, of course, that there is a tension between those who gain from a transformation and those who lose from a transformation, even within one sector, of course, those in the brown, so to say, brown economy, and those who might gain in a green economy, maybe, let's see. The second one is, and I think you have also addressed it shortly in your article, is also the role of emerging economies. So we often talk about developing countries as a bunch, but of course there are very poor countries, but also, of course, there are also emerging markets like China, and China, as we know, is one of the biggest global emitters. And I think when we look at China, also the question of how much growth is digestible and how much growth is needed for a poor country or for a more equal society becomes even more difficult, I would say, if you look at China. And the third one, maybe also for the coming rounds, is the use or is the concept of a public good. We had another webinar last week where we dealt with unequal access to COVID vaccines. And the participant of South Africa said, yes, but having such a vaccine should also be a global public good, but it's not accepted as this. So the access to medical support is not a global public good, but health is a global public good. So there are big contradictions, and what we both might accept as being a public good, I think there's a big debate going on about what is a public good and what not. So, but I agree with you that such a crucial sector like the energy sector should be controlled maybe a bit more, and also the access to energy should become a public good. Thank you so much. Before I come to both of the commentators, I have a short look at the question that came in, and maybe I start. There are 3 questions, but maybe I start with 2 of them because both of them address Johannes. One person from the audience asked, you state that neoliberal green finance has no significant environmental effects or even adverse income effects. Are these statements based on empirical evidence? It is asked because he or she says, because empirical evidence on the impact of sustainable finance is rather rare. So what is the empirical basis of your arguments? That is one question. And Otto Ilchmann asked if solidarity is a widely used term. What is your understanding of solidarity in the context of green finance? And maybe I think this might also be important for the commentators to know. Maybe you could address that.
So thank you very much. I'm very grateful for these 2 questions. First, on the question regarding the empirical evidence. And I think it's kind of obvious that there is no clear empirical evidence that green finance has a positive impact on the environment, simply because the way how green finance is usually framed and discussed has no impact on the environment. It has no impact on the way how the common economy is organized. The main reason for this is that one calls it something green finance and means basically that private investors have the possibility to invest in green bonds or other forms of kind of private initiatives. The point is that this does not make any difference. Also, green investment has not shown any kind of higher return compared to brown investment, according to the IMF, for example. This is absolutely not surprising to me, and this should also not be surprising to anyone, because if one assumes what, for example, mainstream theory in economics assumes, that financial markets are by and large at least somehow efficient, then the individual behavior on these markets doesn't make any difference. And if there's some investors who want to invest into green bonds, for example, as long as there is somebody who invests in brown bonds, the environmental impact is zero. That's the reason for why not really an impact can be found on that. But, and that's what we do in the special issue, there is an impact if we look at the micro level, for example, and we have several examples and cases in the special issues where we see that under the heading of green finance, investment is undertaken. And in the end, if you look at the micro level, you see that this very often tends to harm the local population, tends to contribute to an extraction of resources, natural resources, and also financial resources. And the same holds true for the macroeconomic level. So for many, many years now, the UNCTAD and other researchers have shown very clearly how and why the current global financial system extracts financial resources from the global south, and how and why it makes it so difficult for these countries to keep their economy stable and also to develop a kind of more sustainable economic growth. And there is a bunch of empirical evidence on this. And I think if you talk about green finance, it's absolutely important to open up the perspective and to discuss this in this broader perspective, not just narrow it down to the question of what green bonds or what financial investment can do, because there, of course, we do not see any significant impact. But we have to look at the broader perspective and in the micro level, and there is a huge evidence that this is kind of problematic, the neoliberal form of green finance. And regarding the question on solidarity, I think a big problem is, of course, it's not that we cannot just analyze the current financial system as something being isolated, but it's part of a global capitalism. And the point is, in global capitalism, what dominates the processes and the economy is the search for profits. And if the search for profits very often is in conflict with environmental issues, and also, of course, in conflict with working and living conditions for people. So what is required is to organize the global economy differently. And this can only be done, of course, based on solidarity in terms of working class solidarity, because of course capitalists have no interest to organize global capitalists differently, because currently they benefit a lot from it. But those who have an interest in organizing things differently are working class people in the global north and working class people in the global south. Although, of course, it for sure will last some time to build this international global solidarity, I think it's something that we should keep in mind if you think of more progressive perspectives and a kind of a future which really takes into account the environmental issues and the needs of people in the global south and in the global north.
Okay, thank you very much. I think one question, then comes one answer, and then comes another question follows, because how you build this solidarity would be another question. But we go on now with thank you very much for your answers. Maybe we can come to that a bit later. And now I ask my distinguished commentators, Anna and Oscar, to give your comments, because you have heard now and you have learned now about this observations, and you have heard the analysis from Julia, Lama, Johannes, and Samuel. And I guess you also have read through the other articles of the YEP special issue. So from your point of view, what do you think are the most crucial points, and what from your point of view needs to be done from a progressive civil society point of view? Maybe we start with Anna.
Great, I just wanted to ask. So first of all, thank you also from my side for the really interesting papers and talks, and that opportunity for me to comment here. I just quickly comment on the papers and then draw more intensely out on what we could do now as a society, as scientists, etc., as civil society. Regarding to Lama and Julia, I think that both of you very clearly show dynamics going beyond the merely finance realm. A lot of the questions you raised related to how we actually implement proper strategies to combat the climate crisis are about power structures, about economic interest and political dependencies. Hence, democratizing the discourse about this could be a first and foremost critical point in preparing ground for social and ecological transition. And this also comes into what Johannes just said when he talked about collectivization of working class power to strive for a just transition. And this then perfectly integrates in what I wanted to say anyways about what we could start doing is, especially from a civil point of view, a more general point of combating the climate crisis is important that the civil society gets the tools in its hands to actually discuss and change on regional levels, on national levels, and international levels, and to discuss strategies and bring them up to make actually a social and ecological transition possible. And we've got some examples here where this already happened. For example, that citizens committee in France, where the citizens even came up with more radical solutions than the actual politicians. And that shows us very clearly that people come up with great ideas when it comes to protecting the world they live in, when it comes to handing this world over to their children and grandchildren in a good way. Also, with you, Lama, Martina also said something important that I wanted to speak about, that that program in Jordan was also first and foremost a program of job creation and refugee replacement without any kind of proper environmental focus. However, I think we also need to rethink work as a concept as such, as jobs which create more emissions or build upon and perpetuate natural resource depletion, and others do not, or in a much lesser extent. Coming back to like the Austrian context in this question, we, for example, absolutely need caretakers in Austria. At the same time, these jobs are very low carbon intense. And I think having this in mind, we also need to be aware of that job creation and environmental concern are not necessarily always opposing issues. Of course, like we need to talk about the growth paradigm and stuff like this, but caretakers do not necessarily link to economic growth and stuff. So this is on the more general way of what we could do or what we needed to start doing against the climate crisis. Related of this, of course, that they discussed problematic of green finance, where I see a lot of problems that green finance has is also rooted in the inherent problematic free flow of capital in our current financial system. All of you talked about this. I can only agree upon that. Hence, we also need to think of more efficient regulation probably. We also can demand more transparency to where companies and private investors put the money. Julia, I think you also say that we also need to think of why that money is flowing to somewhere, and that goes with transparency and also monitoring. We can also more effectively tax corporations. We can also, by that, like more efficient tax, corporation taxing, sorry. We can also secure more or higher public funds to be like more directly involved into environmental projects, for example. We could impose quotas on banks for giving credits to really sustainable projects, etc. So there's a lot of things we could do. However, we also need to keep developments on the financial markets as such in mind, and I'm done in a second, because right now we experience a shift from assets to index funds, and I found that a very interesting feature, because the providers of these index funds exercise growing private authority in capital markets, as those index providers steer investments through the indices they create and maintain. Also, they define the criteria according to which companies or countries are included into an index, and by this, they are practically becoming gatekeepers that exert de facto regulatory power, and thus may have important effects on corporate governance and the economic policies of countries, which then again related to our strategies to combat climate change. So that was my comment. Thank you again.
Thank you, Anna, also for giving us some very concrete suggestions what could be next, or also red flagging, so to say, the role of investors, of big investors, I guess. Now I turn last but not least to Oscar for his comments and his suggestions. Please, Oscar.
Thanks very much, and thank you to all the panelists. I think in going last, I get to agree with a lot of what's been said already, so I'll just try to supplement that a little bit. And I think my initial response to this question of green finance and is it a trap was that in many senses it is, in the sense that the number one priority now, and that also of a lot of civil society campaigns, is still to stop financing fossil fuels and big polluters. And I suppose more specifically, green finance is a trap when we treat that as a sector rather than as a process for the broader transformation of the financial system. So we're talking more about greening, and I mean both greening that financial system, and also actually part of that is making it smaller or less important, because a lot of what's done by the financial sector at the moment, especially when it gets into complex transactions, is not socially useful. So I mean, the analogy, there was a recent paper by Yves Chiapello who said it's a bit like a diet where you only count the salads and not the ice creams. If you focus on just the green finance part, that's sort of where you end up. And of course, that said, a lot of it does depend on what we define as green finance. And I think in what Johannes calls the sort of progressive or transformative green finance, and I think there's obviously a lot that I would consider as very positive. And actually, I'd also say that even on the reformist side, some of what is in Johannes's category as reformist might involve non-reformist reforms. So I mean, I'd want to sort of pass that out a bit and say, for example, I mean, some things like if there are well-established green credit policies that put minimum requirements for the proportion of bank loans targeting green projects, and that could be non-reformist in the sense that it is helping to move the overall economy in the right direction, even though obviously it's not enough in and of itself. And I think there's a similar ambiguity in Green New Deal concepts, which I think Samuel and Julia mentioned. I think just on that, I think one positive I'd like to add is that I think that I really welcomed when UNCTAD and others started to put forward, sort of revive this talk about a Green New Deal that first appeared around 2008, because I think it's a useful counterpoint in the context of the UN system and IFIs to this talk that has emerged around green growth and around a sort of private sector-led green economy. So, because if you frame things in terms of a Green New Deal, then it does allow for putting more focus on public investment, which is really vital, and also to talk in the language of Green Deal about the need for a just transition and what the distributive effects of your changes are, as Julia was talking about. So I think I sort of underscored it. Actually, I think as a framing, it's really important as a counterpoint to some other trends that had emerged. I think one other thing I'd want to say is that I think it's very important alongside green finance. So I wrote a short book last year, or over some years, but it came out last year, called Change Finance and Not the Climate. And it talked about a lot of the issues in green finance, but the last chapter of that was around public investment. And it does talk about public investment and energy democracy. And I think that that's important to stress, not least because actually, if we look at the reality of what is happening at the moment in the name of green finance, especially in the majority of worlds, and actually that is almost entirely reliant on public finance. So I mean, I do a lot of work on the Green Climate Fund and some other IFIs, and what they tend to do is they introduce de-risking interventions such as first loss guarantees and so on, basically underwriting the investments of the private sector so that they're not making losses. So it's sort of they're socializing the losses, but the private sector can gain. And actually, you can see that through, if you look at, the UNFCCC does some biannual reporting of climate finance flows, or we're engaged at the moment in a sort of portfolio study of the Green Climate Fund, and it's really clear that actually that almost all of the private finance in those spheres is actually underwritten by public finance still. I think the last thing to say, that I was very glad to hear that when Lama talked about debt in Jordan, because it is a really important focus at the moment, not just in Jordan, but that there is a looming global debt crisis that is undermining countries' abilities to act, whether it's on climate or on healthcare. And so we had, so there are estimates from UNCTAD, and I think more or less similar from the IMF even, that there is this sort of $3 trillion post-COVID financing hole that a lot of economies in the global south face. And I think that when we're talking about climate finance, actually, we also need to be, and development finance. I mean, there is a push at the moment from a number of civil society groups for a new and substantial issuance of special drawing rights through the IMF, and I think that's an important demand to highlight. I mean, I think it's likely that there will be something. It's unlikely that it'll be the 3 trillion that the groups are demanding. But I think that actually to be talking about how some of these discussions relate to the broader global debt crisis and what can be done about that is a really useful discussion to be had. So I'll just end there, but hopefully that sort of supplements a little bit what was said already.
Thank you. Thank you, Oscar. I think you raised also an important point, because also much of climate finance that has the tag of climate finance. We know that much of climate finance is just a double accountancy of funds that are already devoted to other means, but it's a bit of greenwashing. At least quite often, and 90% of those climate funds come in the form of credits. So also green finance might add to the debt pile. I think that's an important point to raise. I will give now our Julia, Johannes, Lama, and Samuel the chance to react to our commentators. Would you like to give your comments on the comments? Who wants to start? Or do you agree with everything that was said? Julia, please.
Hi, yeah, I suppose I could start. Thank you very much for this excellent discussion and for really amazing comments. I want to first kind of jump on the tail of what Johannes was commenting about the impact in response to one of the questions about the kind of palpable impact of green investment. And I can say that actually that, yeah, in some cases it's difficult to track what exactly that impact is. But if we're looking at the impact of it specifically in the context of, say, European energy market and the deployment of renewable energy capacity, new capacity, we can say that actually it has had over the history of this market liberalization a negative impact, because private investment has been favored through these private, state-private partnerships and directly. There were all sorts of incentives rolled out because market solutions are preferred solutions, even though it is not, there is no expectation of that in the EU legislation if you look into it, but still this is the preferred way. And so green investment, private investment was supposed to save the day. And we now have the data that actually deployment, the investment in new capacity has been dropping since 2010 or so, and the pace at which private funds are financing new capacity cannot allow for the goals that the EU is committed to, decarbonization goals, to be met. So we can see that actually this has a negative effect. It does not allow to achieve the goals that are set. Because again, and this is where we have to come back to energy being a public good. Public good is what? Public good is a good of universal demand. But at market price, it can have, the demand will never be fully satisfied. So it has to be financed, co-subsidized by the state somehow. Either you subsidize the company directly by allowing for cheaper tariffs, or you give some sort of breaks to customers. One way or the other, you're subsidizing the profit. So it's a known thing in economic science that public goods are always cheapest when you have them in store, i.e. publicly owned, because then you do not care about making the profits of it. So there is no economic case for energy utilities to be privately owned whatsoever, especially when so much public money is being thrown on the decarbonization projects. It simply is subsidizing of profits, and very often it's just shareholder benefits, shareholder dividends. In terms of global solidarity, I think and I talk about this in the piece, one of the things that needs to be done is the acceptance of global responsibility for the climate change that is predominantly carried historically by the primary industrializing countries, but also now by the wealthiest people of the wealthiest countries, because it is documented that they are the ones who produce most emissions. So through some sort of international coordinated actions, support of financing rather than financing through debt mechanism, private financing, needs to be done for greening programs around the world, not by indebting and crippling economies, but by actually funding internationally and nationally, allowing the states to fund various programs. And I think that is very important. In the EU context, there is a historic opportunity now with the EU Recovery Fund and with the European Green Deal to do precisely that. And what Anna, you were saying is very important. So there are jobs, actually, there are a lot of jobs that can be created in that's a very low, they are very low low carbon impact, right? And COVID COVID suppression has exposed to us which jobs are actually fancies, if you like, and which jobs are absolutely pivotal for any society to survive. And that is care. That is that is taking care of our waste, taking care of our elderly, children, education, healthcare, those very basic food production. Those are the sectors that should be prioritized. But then again, profit. They are not always the most profitable, not least because many of them are in the public goods sphere. So how we resolve that without eco-socialism, I don't know. But then again, I'm an eco-socialist, so I'm going to stop here.
Thank you very much. Anyone else from the panel who wants to address what the commentators have said? If not, yes, Lama.
I'll just quickly add something to what Oscar was saying towards the end about the looming debt crisis. And if I understood correctly, like that we would have to take into account an environmental perspective or a green perspective when addressing or funding solutions to the debt crisis. And I think this needs to be applied more broadly, because it seems, at least through my research, every time there's a crisis, and I use the air quotes because it's the framing of a crisis. So the refugee crisis or the debt crisis or COVID or things like that, overwhelmingly the solution has been to provide more credit, which becomes a trap of debt. And even when that credit is focused allegedly on the environment, as in the Jordan case, for instance, the solution doesn't really address the problem, but rather addresses other problems for capitalism, which is the creation of more credit, of more accumulation, of more private interests. And again, in a lot of cases, the state seems to be playing a role in subsidizing this, but whether or not the state plays a role, the debt itself does that. So I'm kind of wary about the global debt crisis and the solutions that are going to be proposed, because I think we can all kind of predict them in advance, which is why I also think the point raised earlier about not treating green finance in isolation as a separate sector is very important, because we need to take this to make the principles allegedly underlying it of more green, environmentally friendly, more public friendly, underlie all the funds and all the assistance. But, well, I'm skeptical, rather cynical, on whether this can be applied under the current system or not, but.
Thank you, Lama. And I remember in your article that you also mentioned the conditionalities that come with debts. So also from the international financial institutions. So maybe they cement further policies that might not be socially and environmentally viable, I think.
Well, sorry to jump in again, but also we touched very briefly on how, even though they allegedly fund these environmental or green projects, they continue to spend 3 times as much on fossil fuels and unsustainable energy as sustainable ones. So,
yeah. Thank you. Thank you for the clarification. I turn again to our audience because some more questions have come up. Also addressed to Johannes, but maybe also others would like to join, because I think all of you can give very good answers to these questions. Corina asked 2 questions. One is, Johannes, can you give some examples of green finance initiatives that are neoliberal, reformist, and progressive? So at least one example of what you mean by neoliberal, reformist, and progressive green finance initiatives. And the second question is, what type are green bonds, for example, or SDG bonds? Are they neoliberal, reformist, or progressive? Which is a very concrete question. Maybe, Johannes, you could start, but maybe others, if you like, please join in.
So thank you very much. I'm very happy to answer this. But before I go to this, I'd just like to pick up on the comments. So thank you very much for putting this together. I think we have already a very good overview of now what's going on and what's at stake if we talk about green finance. And I think what Oscar said, arguing is green finance a trap or not, is really very much depending on how we define green finance. And if we have this narrow definition of green finance by just focusing on the financial sector, and this is the, I would say, dominant way of speaking about green finance today, then we have a problem. Of course, obviously, this is a trap. If we have
speak up a bit, sorry, yeah.
Sorry. So it's if we consider green finance as a kind of transformative process, green finance is a part of a public approach to the provision of goods and services in an environmentally sustainable way to everybody, then of course it's a different thing. And I think it's really important to open up the discussion and to not to leave the discussion to those who try to narrow it down to the financial issues, but we have to discuss this in a broader framework at the global level. I think that's really important. So coming to the examples now. In the case of neoliberal green finance, I would say a very simple thing is also, and this overlaps with the second question, SDG bonds, for example. Whatever you leave just to the financial market and you hope that the financial market will solve the problem, will not work. So this has no impact. I would say it that bluntly. What is needed, and this is a reformist approach, is clear rules for green finance or for the economy in general. So what are you allowed to do and what are you enforced to do? So we need very, very clear environmental rules first. Second, we need also extremely strict rules regarding finance. We should not leave it to the field of private green finance to define what's going on and where investment takes place, but it has to be guided by the public. And this can be done, of course, by using central banks, by forcing the banking system to invest in certain categories, by public finance, what means that you try to take the money that is out there, tax the people. We previously also thought about tax havens. So there's a lot of money out there. Take this money and use it for a sustainable transition. That would be the sustainable approach in the tradition of reformist green finance. And example for this progressive green finance, that's something that's still to be done because it's based on the construction of a global solidarity movement that then allows to implement these equality at the global level and also the opportunity or the possibility for everyone to have access to a sufficient amount of natural resources, and that provides a decent life for everybody. And within this, public green finance can play a very, very important role. I hope that this helped to clarify a bit the different categories. So from a kind of progressive point of view, I think it's important not to talk just about neoliberal finance, but to include these broader perspectives. The reformist approach very much already to be seen within the UNCTAD proposals. So they are very clear on that, what is to be done, how and why the nation state should be strengthened and protected also in the global south, and how public money can and should be used for a sustainable transformation.
Okay, thank you very much. I hope that makes it a bit clearer. Does anyone want to add something? Maybe also other categories like the green bonds? No. Okay. Then I have a question of Adrian Brown, who, sorry that you have waited for so long for this for an answer. He comes from the Arctic Center at the University of Lapland, and where is it now? And he says, my research focus is on green financial instruments like green bonds, we have it again, and to what extent these can be utilized to achieve circular economy implementation in the European Arctic. So we have circular economy, we have the instrument of green bonds, when we have, as a region, the European Arctic. it is indeed very important to highlight that the Global South challenges are, as for instance, Johannes explained. Yeah, so it's important. So he supports that. To anyone on the panel who would like to answer, how do you value the significance of green finance solutions in the Arctic? I'm not sure if anyone feels good about or knows anything about the situation in the Arctic, but if you do, please speak up. The significance of green finance solutions in the Arctic, also as climate challenges arise globally. So, anyone comfortable with the Arctic or a circular economy, maybe in general? Green finance for circular economy solutions?
Maybe coming from a regional development perspective myself, we talked a lot about global strategies, global action taking, global responsibility, and also solidarity. I think it is also important when it comes to funding to actually fighting the climate crisis. It is important to not only have the global level in focus, as especially in smaller regions, for example, democratizing and collectivizing action can happen easier and faster. Hence, things can be done on different regional levels, also national, international, and global levels. However, putting more weight on regions and nations' responsibilities themselves, and maybe that suits to that question now because the Arctic itself is also a region with particular issues coming up and related to climate change. Hence, by putting weight on regions and nations' responsibility for these issues, it is less easier to say for politicians, for national politicians, for example, well, I as a small country cannot do a lot alone. So I also have two examples from the little municipality I grew up. The neighboring municipality has invested to erect a wind park with wind turbines a few years ago. And by funding this project with communal money, and here we are with energy democracy again, the municipality also operates this wind park. Through this also its returns, if there are some annually, they say, through this its returns and the asset itself lies in the hand of each and every citizen of that municipality. Also the people that love it, they say they're owners of a renewable energy source plant and they're super proud of that. However, also on the region, and there we connect back to Lama and Julia's points of power interplay, etc. A negative example from the same region stems from a big corporation which is steadily expanding, even though there's only little construction plots left and land prices have been rising like crazy, as well as traffic intensity is already quite high for the nature and inhabitants. However, that corporation still gets land for the construction plots from the politicians. To make things worse, this is highly correlated to environmental issues because there was also a report on intransparencies with environmental protection inspections, which are usually necessary for bigger construction projects in advance, etc. So I think putting a regional perspective as well onto that whole discussion here would help us also to find solutions, especially when Johannes talks about solidarity and global collective action, which could be footed on a lot of small regional projects.
Thank you so much, Anna, for these very enlightening and interesting examples. And I think it's always good to hear very concrete examples also from a regional perspective, because of course that's where policies are also made, not only on a very global scale, but also on the regional or even local scale. But that before I go on to the next questions, that somehow brings me to the power relations and power structures. And I remember that Lama has also explored a bit or explained that also in Jordan, the beneficiaries of the compact were local elites. So my question also is whether politicians, whether businessmen, we also know that those responsible for the highest carbon emissions are always the rich ones, not only rich countries, but also rich people in poor countries. So so environmental inequality goes hand in hand with political and income inequality. Lama, can you explore that a bit, and maybe others want to join? How to break this power? How to analyze the power structures and how to break some of those powerful powerful interests that prevent real viable transformation.
So thank you very much for that. So in our paper, we explore this less so with the inequalities of emissions or who's benefiting environmentally or not, and more so with the underpinning political and economic benefits and the unequal relations there. So even so, we focus on, for instance, a project by EBRD in Jordan under the Humanitarian Development Nexus or the bank's refugee response plan, which is going to enact a wastewater treatment plant as part of addressing Jordan's water problems and so forth. But what we look at is that even if we do acknowledge that the existence of this plant is going to provide benefits on the ground to the people of Jordan and help address some aspects of the issue, the benefits and the beneficiaries are not equal. So in contrast to that, there are massive political economic benefit to both local and global political economic elites. So this includes Jordanian businessmen and political elites who these loans help to keep in their positions, help them accumulate because they gain access to the contracts of these projects, etc. But also donors. So I previously mentioned the EU's interest in maintaining and providing as much support as possible, financial and otherwise, to Jordan in order to keep the Syrians there, and they explicitly, so some of the EU documents explicitly state that. They say that it's a success when refugees do not leave their initial or their first sort of point of refuge. So they keep the refugees there, and economically, of course, the donors, whether it's EBRD or other donors, accumulate massive interests on their debt, on the credit they provide Jordan. They are able to open up avenues for the private sector. So this wastewater treatment plant and other similar projects push heavily for private involvement in PPPs in the public sector. So I think this could also relate to what Julia was saying earlier about the fact that these are public goods and should be governed as such, but these finance instruments actually push for the further privatization of these goods, even if they don't call it privatization because the term has gained a negative connotation or so. So I think this is where I see the power heavily. It's that, okay, there are some benefits, environmental or otherwise, but how do they relate within the vaster, the broader network of benefits and who is benefiting, etc.
Okay, thank you very much. So time is running really short, so we only have 6 minutes left. So I would remind all of you, the participants and also the audience, to fill in our survey. And I ask Clemens to, yes, thank you. You can see the Survey Monkey link, and I really ask every one of you to click at it after the webinar and answer our short questions. Thank you very much. I'm really sorry we cannot ask. There are coming in more questions and also comments to other questions. I'm really sorry we cannot answer those questions. Maybe if you would like, if the panelists would like to answer them in the Q&A, you can do that now. But for the rest of the time, I would really ask you for a very short answer, all of you, and maybe also the commentators. We know that we have a very short timeline. Within the next decade, we have to come down with we have to have our decarbonization in place. Otherwise, global warming will will be too much. So if we have this timeline of a decade of the next 10 years, 5 years, 10 years, what would you consider the 1 or 2 most important things to do with regards to green finance and also this transition, socially and environmentally just transition? What are the 1 or 2 things that you consider the most important? Maybe we start from the back with Oscar. Maybe you could. What would you think?
Okay, the 1 or 2 most important. I think one thing is to is actually to reinstate the importance of public finance, so that we're not reliant just on private sector, because we know that the private sector isn't going to get us there. It's often not very innovative when it needs to be, so I think within that set of priorities, I think reforming the international tax system, so that you have unitary taxation and put a curb on tax evasion and avoidance would be really crucial, because only if you have public finance, then you can actually use that state interaction to do some of the big things we need to do. I think also, yeah, I mean, in the short term, I'm doing this paper with groups in the US about climate finance in there, and I think that certainly having a large issuance of special drawing rights, I mean, essentially that would be like, it's a bit like quantitative easing, but in the global sense, where you're creating a reserve asset and putting that into the financial system. I mean, it's not a perfect system, but I think that's one way you can access it. I mean, when we talk about climate finance, we're in the scale of billions, and that gets you to a scale of hundreds of billions towards trillions, which you need. And there's not going to be a sort of a pot of money that gets dished out, but it can be sort of money that is floated into the financial system that is distributed amongst countries to do that should be tied to the SDGs and the Paris Agreement goals, which again, although those are not perfect, I think that's probably the best we have within the current framework. So I'd put the emphasis there probably.
Okay, thank you, Oscar. I'm sorry, we have to just a minute because we're really running out of time. Anna, please.
Very shortly.
Leave the world in a minute.
Yeah, putting it to the Austrian context, region here again, sorry. I think we actually just need to be brave and put public money into public employment structures which support energy, renewable energy industries, also other key driver industries, emission low jobs like caretakers, as I just said. But we also need a transformation of the wealth distribution we have in Austria, as wealth is directly correlated to carbon emissions. We cannot have people driving SUVs and others having to inhale that emissions all the time and both pay the same amount of taxes, kind of. So
thank you very much. So that touches redistribution. Julia, please. 1 or 2 things you would really love.
Yeah, I think globally, as an expression of global solidarity, what would be good to see is forgiveness of international debts, especially to low-income countries, transformation of conditionality that international financial institutions and private debt givers give to the governments of various countries, especially low-income countries, as to what they can do with their money. Because as it currently stays, and it's also a kind of their EU state aid rules is also a variant of it, states are not allowed to directly fund socially beneficial reforms. As it sounds barbaric and weird, but that's true. So how can we have countries that are already cash-stricken transform themselves into green economies if they're debt-ridden and they're not allowed to spend money they borrow on green or any other social reforms? If we eliminate that, we can see much faster global change.
Thank you very much. Samuel.
Sorry, it took me a while to find the right button. I'm sometimes a little bit hesitant to focus on single policy details because, you know, all like I'm telling you nothing new, like climate change is happening, climate catastrophe is happening, it's already there. So we are talking about preventing cataclysmic climate change, which will have like unspeakable consequences globally. So I think there's no alternative. We need something like a combined program of social and environmental change that is carried by social movements. And I think the Green New Deal programs are a good starting point for that. And in those programs, we do indeed find those more concrete policy proposals you were asking about. But however, I would like to underline that we were actually to prevent cataclysmic climate change, we would need to include elements of economic policy which were at the core of the labor movement and social movements, the global left and progressive spectrum for the last 150 years, like hard measures of redistribution, socialization, and planning, which do not appear in most of social ecological transformation approaches I know today.
Okay, thank you. Lama, sorry, I had to find you on the screen, sorry.
That's okay, very briefly. So I think I agree with everything that's been said so far. The thing that I would add is that in addressing these issues and in pushing for environmental solutions and economic growth and so forth, there needs to be a shift from a market-based understanding of growth and solutions and sustainability to one that is more focused on the public needs, whether local, regional, or global. So I think that shift in perspective will shift solutions in the right direction as well.
Thank you so much. So it's really a broad picture and broad reforms that I needed if I listen to you. So Johannes, you have the last word for this webinar.
So thank you very much. A lot has been said already, and I basically agree, and I'm very grateful to all of you to have participated and come up with these important contributions and conclusions. Just to summarize and say, it's important not to leave the discussion about green finance to those who benefit from green finance, so financial industry and people related to the financial industry. But this is something that has to be discussed in a much broader context. And as you explained very well, in the context of how do we organize economic activity in a global perspective? And we have to rely, of course, much less on market forces and much more on public provision. And of course, this has to be done in a democratic way, in the best case, also organized globally based on global solidarity. But I think this is the way to go. And thank you very much.
So thank you very much to you, dear panelists. Also, thank you for the technical support, Maida and Clemens in the background. And of course, most of all, I'm very thankful for all your questions and comments. And I wish you a very nice evening. And please, where is it? Have a deeper look at the Journal for Entwicklungspolitik. Thank you and good evening. Bye-bye.
Thank you. Bye-bye.
Thank you.
Bye.
Bye.
Oh, people actually are leaving. So it's one of those where you have a debrief at the end. Thank you.
Thank you.
You don't know with Zooms, like you never know what to do.
We don't have a debriefing here. We have it.
Thank you very much for excellent sharing. Thank you.